everyone, welcome back to our weekly market update video featuring by Marketsall and Rationale. Before starting, please take a quick moment and hit that subscribe button to support us for more content like this. Stocks, equity markets got hotter and risk-on sentiment kicked in yesterday as investors grew hopeful that the conflict between Israel and Iran would cool. And as oil prices started to trading back down, since shipping routes have so far not been impacted by the issues, and also U.S. still rose on the news that President Trump had signed off its merger with Japan's Nippon Steel. So markets here, as you can see in the economic calendar, I'll go through this. First of all, markets found some relief yesterday after reports suggested that Iran, through some back channel diplomacy, signaled to the US and Israel that it may be willing to return to negotiating table, but only if the US guarantees it won't join any a military operation. That's helped S&P 500 closed up approximately 1% up. That's the risky part, because the US Marine ship is on its way, and it takes around 3 days to reach there. But I don't there's a lot of uncertainty going on about that. So Trump, apart from that issue, Trump left the G7 summit, where he also proposed readmitting Russia to make it G8 rather than G7 again, and called an emergency National Security Council meeting. Meanwhile, Israel has reportedly warned some areas in Tehran to evacuate, and Benjamin Netanyahu is openly talking about regime change in Iran during public broadcasts. So these developments suggest the conflict may be entering a new phase. In response to rising uncertainty, we see that S&P 500 and Nasdaq futures are down about 0.5% after a Monday close. US 10-year yields fell to 4.40 levels, while Japan's 10-year JGB yield sits around a 140 levels. The euro is around a 116.15. From 116.15 levels yesterday to 115.50 levels after the geopolitical tensions. Because as geopolitical tensions increase, we see that USD gains some momentum, and vice versa. If the US becomes more directly involved, we could see a surge in demand for both in US dollars and US treasuries as a risk-off movement. Crude oil was in the center of attention, which dropped below $70 during the US session after the optimism from Iran's signal about this back diplomacy. It just went up until $73. As if you're followers of our videos, that I had mentioned a lot about a crude oil short opportunity, which obviously did not work after such a catalyst of the war between Iran and Israel. So the possibility of regime change in Iran raises risks of extreme scenarios. So according to the John Authors from Bloomberg, he sees a 20% probability this preemptive Iranian capitulation will happen, which is accepted by Israel. So the Iranian government will do some capitulations, and it will be accepted by Israel. This is 20%. 45% is Israeli mission accomplished, followed by a Iranian capitulation in the way that Israel or Western countries desire. 25% is US intervention, and 10% Iran potential nuclear breakout surprise. which is the less likely one, but it's on the table amid such uncertain moments. If tensions in like this, like a Strait of Hormuz worsen, risk for sure could escalate. It handles like a 20% of global oil trade. That's the reason we see that some like a price increase at there. A pullback in oil would likely boost like a market risk appetite for now. If we get back to the like economic calendar, the like non-farm payroll numbers were already discussed in the previous video, but I just wanted to in order to make a clear picture, I just wanted to talk about the current situation of labor market again. There's a gradual slowdown after 139k jobs added, and more people apparently like sectors affected by tariffs seem to be pulling back on hiring. And previous months, that was the highlight actually, previous months of non-farm payroll number were revised lower, showing slower momentum in labor market. So there is an obvious gradual slowdown at there. Then we received inflation numbers last week, as you can see here. The core inflation is still on the we can say it's cooling, and core CPI was just 0.1% in May. Annual increase in now is 2.8%, signaling softening inflation. So while the inflation is softening, we see some softening in labor market. That's why this softening actually provides some room for Fed to keep the current level of rates. Companies seem still reluctant to increase their prices, possibly holding off themselves for the tariffs. And with all these with this current state, Fed in kind of wait and see mode for next week's this week's meeting. Apart from that, we're gonna receive as you can see here, core retail sales data, and this here the control group is considered a cleaner and cleaner indicator on core retail demand, which is unaffected by volatile items like a gasoline or car sales. It's closely watched by economists and traders because it gives a sense of underlying consumer spending trends. This measure feeds directly into GDP calculations and particularly PCE number. That's why it's so important. So if we see a jump in this number, for example, if we see the forecast is 0.3% and we see 0.6%, let's say, that means there's an increasing demand, so that there could be still potential inflation. That might be that might push Fed to be hawkish. That's the mentality, and the vice versa applies. And apart from another topic is EU and US trade deals. Still a no deal by July 9th. It's the goal actually, but now just agreeing on some principles. But now the major highlight in the world is more geopolitical. It shifted from tariffs to there. Same there for US and China talks. The US is negotiating export restrictions as a part of deal, and a trade strategy is now kind of blending with a national security policy actually, because these tariffs are not solely related with economical activity. It's also kind of a national security strategies. It's just part of those strategies. And one of the other important development happened last week was this Nvidia's news that investing 25 million in skilled AI. Skilled is now valued around 45 billion after the Series B. That, just giving this as an indicator that still, on the other hand, while this tariff uncertainty plus geopolitical tensions, AI expectations on US equity market is still ongoing, because the main trend is the main structural growth, which is pricing S&P 500 to go higher, is mainly due to AI boom still. That's why we need to follow also those developments out there. That's why I just wanted to touch. And when you go to the industrial metals for such an environment, for sure gold is like is being traded higher. Gold, silver, and like gold platinum ratios, which I had mentioned like actually in the last video, I guess. Like they're just like traded just to the advantage of the silver and platinum for now. And when we see the vice versa situation, for example, if gold is like outperforming silver in technically also in an important way, if that ratio chart is breaking out from somewhere, that might indicate potential recession risks, and there is no such thing in that regard. And also Bitcoin is traded around 106k levels. So let me quickly switch to the charts, but before that I just want to show you one table that I had seen in like Bloomberg opinion research, where I mean, what's the latest situation in rates for like other central banks as well. So here, as you can see, emerging markets back to cutting ways. As you can see, apart from Brazil, Turkey, and Argentina, like all central banks are cutting rates in an environment where they have started to control the inflation and the growth risks are rising. That's why they're cutting. Turkey's case was totally different, using unorthodox methods during the after COVID period. That's the reason. There's like totally different internal situation going on there. And here, as you can see, rate cuts accelerate as tariffs loom due to this tariff uncertainty, pushing central banks to cut rate. So in this like when I look like this, I personally believe that, for example, this week there's going to be FOMC meeting, and also we're going to get FOMC projection materials. But I would still expect Fed to at least cut 25 basis point rates, because we can say that while we started to see some risks on growth side, some potential slowdown, especially in the soft data, the inflation seems to be doing well in terms of being like softening. So in such an environment, while they have, I mean, I understand that they believe that they have room to wait because of the uncertainty arising from tariffs plus geopolitical tensions. But my question is, why would you wait while inflation gives you that room, and it's apparent that a lot of uncertainties are there for the near future? That's what I'm questioning, and we might see some, I don't know, like I mean, I hope it doesn't happen again as it happened in 2021 November, I guess. The policy shift from the inflation is not transitory to its transitory to its permanent mentality. So that's my concern. Okay, let me quickly switch to chart section and try to give you some like ideas that I already mentioned maybe. First of all, I want to start with dollar index, where we are. So when we go to the monthly chart, as you can see, I think we're at really critical level. So if we see some like increase in tension geopolitically, a potential technical side will also be in line with that idea, that risk of sentiment. Because if we see, for example, escalation on this war, we might see a potential reversal just from this lower boundary of dollar index in the monthly chart. So for the ones looking to be long in USD, I think we're not still there as it's a monthly chart, but I think we're not that far away. At least I will be seeking at some point for those kind of opportunities, but we're not there right now. That's why still for this week again, I would rather to be long in euro, long in US Swiss franc, and maybe long in GBP, or yeah, like, and due to risk of Fitch characteristic, Japanese yen maybe against like a US dollar or Australian dollar or New Zealand dollar. So I would structure my trades for this week around this this circumstance. So yeah, that's, I mean, I just wanted to show you this monthly parallel channel, which is offering some potential reversal. So secondly, if there is a reversal, what could be the good trade idea? I think USD South African Rand offering a potential ascending triangle chart pattern forming here if it managed to turn from here. But I mean, I just drove it like this, but if we see some, you know, further continuation of this downward movement, it might lead to form a rectangle or like a double bottom or ascending triangle like this. So that's, I just wanted to show you this, like at least there's a some base is like a being established. So that's why I just wanted to show you. Secondly, Euro Aussie dollar in the daily chart, if you look at this, after this breakout, it's pulling back, and look at the pulling back area where we see some rejection. The short-term moving averages, which is like this blue line, is 50-day moving average, 10-day and 21-day moving averages. As you can see, these areas worked, like, I mean, acted as a support. So it's again like converging to that moving average area. I think still it's an opportunity to be long against Aussie dollar in euro with a stop loss like this. For example, this might be a nice game plan. In euro New Zealand dollar, same again. If you don't want to just like try to be long here, you can wait and see if there's going to be breakout here. So you have two options. First, which is more like a risky one with a stop like this, and the second one, you can just wait and trigger the entry, like enter the trade here with a stop below around like and any candle would be formed here. So in gold, still the uptrend is intact, and when you go to the daily chart, as you can see, there is a if we see some like a pullback mechanism here, and such movement would lead to form a cup and handle-ish chart pattern formation. And still, I'm in the with the current uncertainties, geopolitical tensions, still any kind of correction is a buying opportunity for me in gold. And I think the highlight of one of my trade idea that I had mentioned before is silver trade idea is acting pretty well. I had mentioned it around here, I guess. It's broken out right now and moving higher. That's the current situation, current look for silver. And I think, yeah, another trade idea that we had given in these videos, soybean oil futures in the daily chart. Sorry, let me just up. As you can see, after a huge downtrend, there was a consolidation here, and I had mentioned this rectangle chart pattern after this downward movement as a bullish reversal, and we saw a huge breakout with the beginning of this week. It's moving higher. A potential pullback movement will still offer to be in this trade, and I will be following and I'll be monitoring this, and I'll try to update you guys from the videos and from the Rationale newsletter service. And if you're not still like a subscriber, you can just find the link just below the video to become a subscribe a Rationale newsletter service, which you can get all these kind of trade ideas directed to your inbox. And lastly, I just want to show you this oil trade idea that I had mentioned, which I was apparently mistaken. I mean, not mistaken, but I mean, there was a huge catalyst happen, this war. and I'll still be watching, but currently this breakout is like an invalid, and it will be considered as it's a fake breakout. And yeah, but as you can see, the rejection area, this line was already there just before it happened. I didn't draw this according to that. So apparently the market is like respecting this downward trend line, and maybe in like if things getting like normal at some point with the current supply and demand conditions of oil market, I still believe that there is no, I mean, the room for oil to go up is highly limited compared to the downside. Yeah, that the main reason behind that is actually its potential impact on US inflation. And as you might all know, gasoline prices are pretty important decision maker in US politics, and definitely higher oil prices with an ongoing tariff issues, while tariffs going to like support inflation, there should be something to compensate that support, right? And I think it's oil. That's why like in like a more, let's say, strategically, they wouldn't want oil to go higher with this mentality. So that's all I'm gonna talk this week. I hope like you're enjoying what you're seeing here. I hope it's helping you. And if you just like have any question, you can just like send an email to Marketsall, or just write just down below the video and as a comment, and keep following us, and subscribe to our channel, please. I wish you a really nice week.